Glad to have you back on the Libertarian Philosopher channel. Never trust a central banker with your money. It is something the entire world is doing, and the entire world is finding out why it cannot have economic prosperity under that kind of philosophy. Our Federal Reserve Chairman Jerome Powell went on 60 Minutes yesterday and said basically we're going to be able to handle this situation to fight the recession. He said that the unemployment rate may go as high as 25%. Of course, it could go higher. He also said the economy could contract by 30% in a single quarter. It would be the worst quarter of all time if that happened. And 25% would actually be a record for unemployment, even adding the Great Depression into that history. This should alarm everyone. The Fed chairman said that there was no limit to what the Fed can do to lend money to the financial markets. In other words, he's saying it doesn't matter how much money is being asked for. We are willing to create this money and lend as much of it out as is demanded. Anyone who knows anything about economics knows that when too much money floods into the market and chases too few goods, prices rise, the value of money falls, and you have more and more people falling into poverty. So Powell also said the Fed could enlarge existing lending programs or start new ones. He has no solution other than debt. Create more debt. Get more people, more businesses, more governments indebted. That's all he has. Enlarge existing lending or create new lending. He also says that the central bank could try to lower interest rates. That absolutely is unbelievable that he would say that, because if we look at what interest rates have been doing and where they are today, they really can't go any lower unless he is willing to bring negative interest rates to the American economy. So this is the federal funds rate, the bank-to-bank lending rate that the Federal Reserve sets. The blue line represents where they have set that interest rate over the past almost 70 years. And they were at their all-time highs in the late 70s, early 80s, and ever since then they've been trending downward. Now, if you look at where we are today, they are actually lower than where they were during the financial crisis and the 2010s to try to get our economy out of the economic slump. The lowest that the federal funds rate got was 0.07% back in February 2014. And during this time, where you see the line is very close to the bottom of the graph, this is the 2010s, the first half of the 2010s, where interest rates were at their lowest level in history. Then Jerome Powell decided to try to raise interest rates. Well, it began with Janet Yellen in 2016, 2015, and then once we got up to not even 3%, Jerome Powell comes and brings interest rates down at the fastest rate that we've seen probably in many decades. And so now they're actually lower. 0.05% is where the federal funds rate, that's the interest rate that the Federal Reserve sets for a bank when it wants to borrow money from another bank. And it is at 0.05%, lower than where it was at any time during the financial crisis or during the 2010s with record low interest rates. So he repeated that Congress is likely to need to spend more money to keep businesses and households from becoming insolvent. 2 points about that. Number one, if he has everything under control, why is he asking Congress to come in and help take care of the situation? I mean, can't the Fed just create money and lend it to anyone? Well, that's what he said. But why is he saying Congress needs to come in? Well, because Congress doesn't have to make a loan. They can just print money and hand it out, which is what they did with the $2.7 trillion coronavirus, the CARES Act. which that came out back in that was passed in late March, and it was going to spend money on business loans as well as on $1,200 or $2,400 checks for individuals and couples. So the government can actually give you free money, whereas the Federal Reserve can only give you a free loan. So, number one, he does not have that under control. Number two, keeping businesses and households from becoming insolvent should not be the job of the federal government, and it certainly shouldn't be a reason for creating a central bank. If, in fact, a business or a household did not put money aside for hard times, they are going to go insolvent. That is the reason why you put money into a rainy day fund, because hard times always come. Whatever reason they come, and you want to have at least 6 months, but really you want to have no less than a year of money put to the side in case hard times come. Those with the least amount of savings are going to be the first to go down, whenever there is a recession or depression. And Jerome Powell also said that now is not the time to worry about the long-term consequences of this debt spree. Well, what he's really saying is we don't believe in worrying about long-term consequences because, in fact, we have seen for generations the Federal Reserve continue to create debt, and there has never really been a time since the financial crisis that we even try to reduce our debt spree. So now he says the time to deal with that, though, is when we're through this recovery. Let me give you an example of how long that can take from before the Great Recession until when President Trump comes to office. It took 10 years for the unemployment rate to recover. It was at 4.4% in 2007 before rising up. Then it peaked at 10% in 2009. It did not get back to 4.4% until 2017. A full 10 years for the unemployment rate to recover from that recession. This time, it could take much longer because the economy really has been slowing down in terms of its growth for most of the 20th century. It used to grow at 7% a year in the early 1900s, 1910s. Now, during the last decade, it grew at only 2%, and that is without a recession. It's the slowest rate of growth in the history of our country without a recession. So we have long recoveries, and for the unemployment rate to be at 14%, which is last month's number, and it will go up to 20% when the May numbers come out in June, we're going to see the beginning of the longest period of recovery, and we may never really recover. We are just in a really big problem with our economic situation. The consequence of stopping spending now risks long-term damage to the productive capacity of our economy and people's lives. Well, stopping spending is exactly what we need to do. We've been spending too much, and it has produced way too much debt. What actually causes long-term damage is an economy that cannot grow based on too many taxes, based on too many regulations, based on devaluing the currency. That is where you create long-term damage. That's why the economy grows so slowly. That is the reason why we have recoveries that are taking a decade instead of taking only a couple years like it used to be in the early 20th century. We now have record household debt at $14 trillion. Record corporate debt at near $10 trillion. Record national debt, federal government debt, at $22 trillion, which, by the way, all of these numbers I'm showing you were what we had before coronavirus really started wreaking havoc in America. All of those numbers have gone up since then. U.S. national debt is now closer to $25 trillion than $22 trillion. And that is because this is an economy based on consumption, which is fueled by debt, that comes out of the U.S. Treasury printing money and the Federal Reserve lending money and making interest rates at near nothing levels. So the debt levels are the reason why we're in such a bad economic situation, because businesses cannot invest in new products, new goods or services as much because they have to pay back the creditors. And now we're using more debt to solve another economic recession, which will be the greatest depression, I think, in history. Using debt to solve it, giving more people and businesses money that we don't have, money that's created out of nothing, digitally or by whatever other means, so that people can continue to spend. This economy needs to be allowed to collapse so that we can reset it and have true capital spending, not spending of debt or of a loan, but of money that we have saved up. So we have to have a new path. And what are those ways? Well, here's 3 that we can talk about. Abolish the Federal Reserve. That's the debt machine. That's where we get so much of our debt. Governments, households, corporations are all indebted because of how many loans the Federal Reserve has either loaned out directly or has made it easy for banks to lend out to everyone else. We need to legalize private currencies because, in fact, if you have a currency that's controlled by one bank, as we do with the US dollar, then they have the right to destroy it. If you got multiple banks controlling the issuing of money, then competition among those banks will incentivize the preservation of the value of those currencies. We used to have this system back in the late 19th, early 20th century before the Federal Reserve existed. We had lots of currencies. And the Federal Reserve, of course, being in charge, sets interest rates for all the banks when it comes to bank borrowing. And, of course, because they have unlimited money, they can bring those rates down to 0 or even negative. Negative interest rates and 0% interest rates cannot exist in a free market because money is scarce. But if you have a bank that creates the money out of nothing, then it becomes abundant. It becomes not money at all. It just becomes a currency whose value cannot be preserved. If you don't like the idea of going to competitive currencies or multiple private currencies, you can restore the gold standard, which is also something we had during the 19th century, in which we required banks to hold gold. We required the U.S. government to hold gold, and so therefore we could not print as much money. We kept money scarce by tying it to a scarce commodity like gold and silver. If we don't do something like this, if these ideas are not taken seriously, we can forget about the economy ever recovering. We will continue to sink into an ocean of debt and of slow economic growth. Poverty will increase because prices will continue to rise as a result of the inflation created by all of the spending, borrowing and spending and printing of money and manipulation of markets. And unfortunately, we're not there yet. We're not having a serious national conversation about getting rid of the central bank, legalizing private money, or restoring a monetary system that preserve the value of our money like we did in the past. So thanks for watching. We appreciate you subscribing to the channel Libertarian Philosopher, and we hope to see you soon in the next video.